And I think everyone is now looking forward to the conclusion. Sorry, not the end of the year. Sorry, I'm already at the end of the year, the end of the month. Sorry, it is the end of the first month. So to all of you who have been crying rivers and of pain, January is finally over. I think there's that song by the infamous
January is
now
finally
Robert
over.
Kelly. The storm is over. The storm is over. And I'm sure everyone started playing that it's the end of January. The storm is officially over. So now looking into the month, let's take a look at what's happening towards the end of the month and all the data that we're picking up. Let's start with our FX markets. Forex markets to kick off. We have seen that we are on the 81st consecutive day of the Kwacha losing value. Yes, Vernon, I am saying this correctly. The 81st consecutive day of the Kwacha losing value. It has been up to 82, so it is a strong loss session. It's a very powerful loss session. And what we're seeing now is that Kwacha is at 18.99 on the interbank rate, and this is going to cross over to 19, meaning that all the pre-administration gains, all of them, every single Kwacha, every single Ngwe that the Kwacha got stronger since the president walked into office back in August 2022 will now be gone. Because basically when he got voted in, we're heading to it, but when he did get voted in, the Kwacha was at 19.2256. Okay, so we're heading back towards then. If we cross over, all the confidence gains that the administrations have claimed are officially gone. And therefore, they are starting from scratch to try and regain the confidence of the economy at large. So that is number one. I think that's been playing on the market for everyone. And obviously, that's also because of debt negotiations, while simultaneously, we have no inflows coming into our bond markets effectively, while simultaneously, we are dealing with a back end of our... we're dealing with the back end of the purchasing cycle or the procurement cycle of farmer inputs. That's been one of the bigger parts of the main problem that's to do with our economy. Now, that also being said, we are looking at the Rand as well. The Rand has also performed a little bit strong. The Rand is also getting strong in South Africa, so therefore import prices. But we have seen a 2-day losing streak in the Kwacha to the Rand due to a little bit of a shake in the Rand, down from 110 to about 1096. So remember, the Rand has maintained its strength against the Kwacha. Kwacha, in terms of technicals versus the dollar and the Rand, is both showing the same sign. It's in a buying cycle and a bull cycle, but it seems to be overbought and still buying against the Rand. Now, looking at the commodity markets, we have seen bond markets that have continued the same strain. USD bonds coming down, Kwacha valuations of bonds going upwards, and we're continuing to go up that cycle of Kwacha-based bonds. Now, if we're looking at on the month, let's say month to date, if you're a bond investor trying to look at month to date, you have seen that year to date, you have seen a 2.29% increase in the value of bonds. Now, versus the inflation rate of 2.1%, that means your bonds have got an above inflation win of 0.1%. And mainly you can see that the win has been from the commodity markets. The commodity markets obviously have shown that gold is up 10% year to date. So if you had your money in gold, you can see that the part of your portfolio that actually been held in gold in Kwacha is up 10.43%, 5.23% in dollars. But as you can see, part of the one which is shaking most of the time is oil. Now, oil has just had a last minute drop with a 2% dip on Monday because of losses from an expected rate hike coming from the U.S. Federal Reserve, with the Russian exports remaining strong, and also the Kremlin allowing Russian oil companies to trade at whatever price they would like. Now, copper is up 10.18% year to date, mainly because of the opening up of China. I think that's been the biggest part of the global economy that has allowed for that. Now, added to this, we have seen that, we therefore are looking for the price increment. And I will give you my expectation on the price increment or the price reduction for oil, and just in line with most of the markets. It is the last day of the month, so we are expecting an ERB announcement. My expectation of the ERB announcement is 55 Ngwe to 98 Ngwe. Somewhere between there is what we're expecting the fuel price to move upwards, in terms of somewhere in the magnitude of about 3 to 4%. in terms of the movement of oil prices. Now, obviously, that's mainly due to the fact that the kwacha has lost an average of 5.16% month on month in terms of the average kwacha through the month of December, and the average kwacha through the month of January. We've seen that down by 5.16% and a 2.93% rise in the crude oil prices from this last month. In other words, the average movement through the last month. So effectively, we are seeing that now. Today, obviously, crude oil prices have come down, so that might help things later. But right now, we're still looking at it as going upwards. So brace yourself for that. Now, there is conversation, Vernon, that has been happening about the oil prices, about oil supply and the shortages that we're starting to see, especially at petrol stations. And some of the complaints have been obviously that it's the fuel or the oil marketing companies. So let's explain how this business model works. Okay, so the oil marketing companies will wait to see what the next announcement will be, and therefore they will, if they can see that there's probably going to be an upward adjustment and they have leftover inventory, what they'll do is they'll hold some inventory, which is what they'll do. And they don't like people knowing that they do this because they think we're all blind and we don't know what's happening. They're holding some of their inventory, awaiting a price increment, because higher priced oil will give them more revenue. You see, that's how this works for them. So the higher the price of oil, the more revenue they can collect as a company, because then all these other costs have already been incurred and they're holding onto it in their reserves. So that's the basis basically of them, and also now with lower taxes for them. So the expectation that they got this cheap oil that they managed to get probably at the end of last year, that they can now utilize to sell into this year, that is the game of speculation that they need to play as oil marketing companies. So why is this prevalent, and we all know this exists? Well, this is the reason, Vernon, why you want to have a monthly adjustment of oil, because last year, I mean in 2021 and 2020, people used to complain, why does Zambia have such long fuel shortages? Remember that there used to be fuel shortages that used to last months in some areas. Well, that's because OMCs had oil which they were expecting the price to go up, and because they had to look at the replacement costs that they would have to incur, so they would take the supply off the market until the government would raise the prices. So it's not sabotage, it's my business. Why should I run at a loss for your benefit? What are you going to do when I'm making a loss? Are you going to come and bail me out? No. If the oil marketing company turns around and says we need a bailout, we'll say these greedy capitalists, why are they looking for government money? Well, guess what? It works the other way around. Those greedy capitalists are saying, why do these consumers want government support and government money? So that's the main thing I think we need to pay attention to on this whole argument, is that this is a business. Okay, these are businesses, and they're trying to make sure that they are not taken out of business, or they are not running at lower profitability because of trying to make sure that they can serve customers that nicely. No, they've got to make money. Okay, so that's why you're seeing shortages. So what the monthly cycle has done as a benefit, which people may have not noticed, is that the fuel shortages are now shorter. Okay, we're not getting those month-long fuel shortages. You get a couple of days of fuel shortages, maybe a week at most, because they're speculating, waiting for the price movement. Unlike those days when they'd be expecting a price movement and they say, right, we're just going to starve the market until the government gets the message. Okay, because it's the same oil marketing companies who have to take money out of their pockets, and they have to make a decision to try and buy fuel, and they have to buy it at the market prices. So they are going to incur the cost, and they're going to now deal with the damage to their books. So that's what's happening when you're looking at that. Now, speaking of oil marketing companies, some news has hit the market today. Not today, actually, 2 days ago. Puma Energy, one of the listed companies here, has actually issued out a notification that it is planning on diversifying its business interests away from just doing oil and jet fuel into LPG gas. Okay, so now that handy gas that is going to be at homes, and they're doing this through the acquisition of one of the biggest gas providers in the country, if not the first, the second actually, OGAS. So they're actually spending about $3.4 million on the acquisitions of OGAS's LPG business. So they're buying their assets, the LPG tankers, they're buying the trucking, everything, because Puma Energy has just decided that they're going to acquire all these assets in order to diversify into a new stream of business. So for me, this actually makes this stock actually quite good. And here's a reason why, Vernon. One, obviously gas prices are coming up. So it's actually encouraged Puma to go into that area. But number two, and most importantly, because of load shedding, a lot of people are trying to switch to gas, and we're trying to switch cooking solutions. So Puma Energy is not only looking at energizing your car, now they're trying to energize your cooking. So therefore, they see that there's going to be a lot of incentive to also switch. There are two reasons why you're going to see a lot more people transitioning to gas. One, well, obviously, the load shedding situation has made cooking on an electric stove unreliable. So people are trying to switch there, those high consumption households. But two, we're also trying to curb deforestation as a world. So, in other words, the alternative to curbing deforestation is getting people to cook with gas. My thing I've always said is that the government and mostly the people in power should consider doing what South Africa did of just giving people gas stoves in order to get them to switch. Because that's why now 61% of South Africans use gas, okay, as opposed to using electricity to cook, because of also the electricity tariffs that were hiked, which are probably on their way. Remember that we've got a 23% hike in electricity tariffs that are going to play out for the next couple of years. So what does this say about the stock for Puma Energy? For those of you who are looking to see, is this a buy, is this not? I've already said that due to the liberalization of the market in terms of all of this, Puma profitability will probably be higher, because we're always going to see market pricing and they're always going to try and take advantage. And also because of these higher prices of crude will probably lead to gaps that will push up the prices. That's one. Two, now that they're diversifying, now this extra diversification will probably give them a new market to be able to tap into. So a $3.4 million outlay for the purpose of going into one of the biggest LPG gas companies that's able to supply gas, especially to households. Because I think the only competitor to OGAS, the major competitor to OGAS would be Afrox. Okay, so those are the main two brands that we've often seen battling it out in this area. So what does it mean for Puma? It actually means that as a stock, it probably is becoming more of a buy, because that diversification into a rising market now already signals to me that they're going to be able to acquire more revenue. And also, they're not diversifying by trying to pick up and understand the supply chain. They're already finding an already existing supply chain, acquiring them for $3.4 million, and therefore taking over that supply. And it's a plug and play situation. So for me, this should actually speak to a bolstering of Puma's stock, or at least Puma's financial outlook going forward. But remember, people, stocks are always a risk. Prices are not guaranteed. Profits and dividends are not guaranteed. Sit down with a financial advisor, sit down with a professional, make sure you talk to your broker, understand the stock. But obviously, as a consumer, I always say to people, invest in stocks on the stock market of products which you would consume. Okay, that's a good starting point. The reason is you know how they make money. You know exactly how Puma Energy makes money because you put fuel in your car. You know exactly how it makes money because you're going to be cooking with their gas. So you know how they make money. The key to investing in a company is knowing how it makes money and then being able to make your decisions based on how they make money, rather than trying to just play the price. At least invest in the company. So that's why I always say, as a consumer and a potential investor in the stock market, always go for things that are things you would buy. The products you would buy are the stocks you invest in as a starting point. Later on, you can diversify into other things and start going into industrial stocks. But I would always assume the best way to start is always consumer stocks and things that you personally have got consumption. You've got consumption experience with, and maybe things that you'd be able to use. So that's just a point out there we wanted to put out for people also on the energy industry, and a big transaction that's happening, $3.4 million acquisition of OGAS's assets, not OGAS the company. They're not buying OGAS the company. They're taking OGAS's assets. So they're saying your plants, everything that you've set up, you're selling them to us so that we don't have to build this infrastructure. We're just acquiring your infrastructure. You will continue to exist as OGAS. Only God knows what they'll be doing, because they're not selling gas anymore. So I don't know what they'll be doing afterwards. But effectively, that is going to be Puma's gas business, unless they're planning on just acquiring a new set of things or whatever the purpose. But we don't know why they're selling their infrastructure. All we know is they're selling their infrastructure to Puma for basically what would be considered a giveaway. So that's why I'm saying, out of those ones, the top two I know were always Afrox and OGAS in terms of their distribution. So that's the main news coming out of the major markets. Now, taking a look, Vernon, in terms of a story I wanted to pick up on today. This has to do with finance. And this has to do with basically personal finance because Tuesday is really where we usually cover personal finance. So looking at how the markets have performed, now this is obviously personal finance Tuesday, where I wanted to capture a little story on health and finance. Um, I always break down to people, and this is a switch. I always break down to people that one of the best things you can do for yourself, so let me just take a step back. I always break down to people that your high five goals of investing. And for anybody who's watching, write this in the comments. And I think this is something you should always remember. If you're watching online, write this in the comments. And if you're listening on air, write it down on a piece of paper. Your top 5 investment goals, what I call your high 5 goals, are harvest, health, higher education, home ownership, and huge purchases. Okay, remember that health. So it's harvest, health, higher education, home ownership, huge purchases. And what we mean by huge purchases are high acquisitions that you have to do during the year. Maybe it's annual school fees, birthdays that you do, things you should be saving up money for. Okay, throughout the year, or big things that you want to do, like a vacation, you want to acquire a car, maybe you want to buy your first piece of land, whatever big acquisitions you're doing in the next 1 to 5 years, those are considered medium-term huge purchases and the short-term huge purchases. But managing your finance and your investments has to meet these 5 goals. And now people don't like one size fits all financial structures where they'll say, well, it's not for everyone. I was watching this psychology this thing on what they're called money therapists. Financial therapists. People make up jobs for themselves. But anyway, I was watching this thing where they were saying it's not a one size fits all. Let me explain to most people who don't like that it's not a one size fits all statement. Who likes saying that? 90% of people are clueless about money, and they're also clueless about themselves. Okay, asking them to figure out who their money personality is really asking them to try and think beyond what they want to do. Okay, the reality of people is that they need something to follow at the beginning so that later on they can get confident and start to customize it. That's the reality. Somebody who's just starting out in finance has really struggled. Okay, they've really struggled when it comes to goal setting. And the point is, they need to focus on just what are things they can follow. Once they can get a few quick wins under their belt, then they can become more confident to start customizing their own goals. Okay, so at the beginning, let's say, Vernon, when you were in school, what sport did you play?
I was more into soccer, but I was winding up on 11th grade. I just lost interest.
So I'm sure you had a coach or somebody. Yeah, you had a coach who, at the beginning when you were playing soccer, did you just go out there and freestyle at the beginning? Or did your coach give you instructions?
A particular position and responsibilities on that position. If it's defense, you are just but defending.
Exactly. True. And that's the point. Later on, when you are now older and you are now a bit more experienced in football, you could now start to kind of flare it up yourself and figure out yourself. And you knew your style that you were playing. So the same goes with money. Okay. At the beginning, when you're being coached, you need to be instructed. See, what people need to understand is you go through phases. Okay. At first, you are instructed, then you are coached, then you are guided, then you are set free. Okay, skipping this step and telling people customize your finances according to you. Yeah, ha ha ha. Yeah, going to find problems because people don't know. They are clueless, and it's not an insult to people. They were not taught. Nobody spoke about money when we were kids. Nobody in our houses, money was taboo. All we knew is things were bought. Okay, especially African homes. We never spoke about money. You don't know how much anyone makes. You don't see them budgeting. Nothing. You have no idea how these things work. And that is how African structure was. We cannot go around just starting to do this. Okay? So I think the point of today I just wanted to get to people was our goals. And I think we got a comment here. I just wanted to make sure that Chisonka Musona is saying, got the point of the main topic of this morning's managing your financial aid goals. Got the point. Yeah. So this morning, what we're going to be talking about is dealing with investment strategy or wealth goals. Sorry, levels of wealth. We're actually going to be dealing with levels of wealth. But today, I just wanted to mention that your high five goals, your high five financial goals, today, just to get started, are harvest, health, higher education, home ownership, and huge purchases. Just things that you can target in that order. The reason I say that is when you're retiring, okay, in your final years, those are going to be the most important things in that order. Harvest gives you a cash flow because you're going to need to eat, you're going to need to transport, you're going to need to move, you're going to need to wear clothes, you're going to need to do stuff. Health takes care of your number one problem in your retirement days. Your retirement days, your number one issue is health. You know, I say this 60% of millionaires around the world, and even starting with America, but around the world, their biggest concern is their health. Double the concerns of other things. Okay, their concern is their health. The third thing that you'll find is that obviously the biggest concern of most people is taking care of their children, which is their higher education. Their concern is the independence of their children, and therefore trying to send them out to be able to take care of themselves. Higher education has been one of the concerns of many parents. And now also trying to do that in a debt-free fashion. And fourth, home ownership, because you don't want to be in a situation where you're insecure about your home ownership, okay, especially in your retirement. Even if you have a pension, you want to make sure that you're not caught in your retirement. And you also want to make sure that your harvest is growing with inflation. That's your first goal. You want to make sure that your harvest is growing with inflation. So you've built a harvest where the safe withdrawal rate allows you to also cater for the fact that it should grow plus inflation, and you should be able to consume about 7.6% of that harvest a year while it's still able to grow by inflation. That's what you should be able to do, and also that it's secure and it's reliable. So you want to make sure that you've built a harvest that does that. And then finally, huge purchases in the interim of your life. You want to enjoy some things. So if you've done well in your harvest, health, higher education, and home ownership, then you can start to chase after huge purchases. Things like going on a vacation to the US or things like that. But you want to try and go on some vacations even regularly. It's actually good for building memories in your life. So that's just something I wanted to put out there, and it's an important part of our thinking today when it comes to goals. So I want to focus on the second one. The second one is health. You know, health is something that a lot of people don't take into consideration, and also some of the dynamics of it. So there's a statistic here I want to share with you, Vernon, which should actually concern the majority of Zambian people. And this comes from the University of Washington, who did an evaluation of Zambia. And they looked at our healthcare trends. And here is something that I personally have been getting concerned about in terms of the healthcare statistics of Zambia. And the first thing I'll tell you, Vernon, is that healthcare is going to become a lot more expensive for Zambians. We may not be paying attention to it. And I'm going to explain why. Because the illnesses we're dealing with as Zambians are no longer those one and done illnesses. Malaria, you're cured, you go home. The things that we most fear that were killing us, it's not the one and done things anymore. Okay, it's not the things like, I know TB, these are lifelong illnesses. I know maybe a diuretic disease. These were the things that were killing people. Between 2009 and 2019, I'm going to read the 2009 list of the most deadly illnesses according to the study, and I'm going to read the 2019 list, okay, of the most deadly illnesses, and you're going to pick up what's happening here. Number one, obviously, HIV, both. Okay, it's been the number one killer, unfortunately. Most deaths were caused by HIV in terms of illnesses. Number two was neonatal disorder. It was the number one killer as well. Number three is lower respiratory infection. This was in 2009. Number four was stroke. Number four was diarrhea. Number five was tuberculosis. Number six was stroke. Number seven was malaria. Number eight was heart disease. Number nine was cirrhosis, and number 10 was meningitis. This is the 2009 most deadly illnesses. Now, 2019 most deadly illnesses. Number 1 is still HIV. Number 2 is neonatal disorder. We're still dealing with that. Number 3 is stroke. Stroke has gone from number 6 to number 3. People are just dying of strokes in this country. Okay, so evidently we have some issues here. Lower respiratory infection dropped from number 3 to number 4. Diarrhea dropped from number 4 to number 5. Tuberculosis dropped from number 5 to number 6. Heart disease rose from number 8 to number 7. Cirrhosis from number 8 to number 9. Meningitis down to number 14. Hypertension came from number 15, now is number 10. Okay, so in other words, what are the fastest growing death cases in this country? You'll notice something. The things that were number 1, that we were most afraid of, are actually declining because we were treating them. We were dealing with them. HIV has dropped by 33% in terms of incidences of death. Neonatal disorder is down by 11%. So we're actually able to say that the children are not actually passing away as much. Okay, but stroke is up by 58%. Okay, so it jumped. The number of strokes that were happening, the people who are dying of stroke, has actually almost doubled. Is up by about 50%. It's probably heading towards a doubling just in the decade. Okay, diarrhea down by 28%, lower respiratory infection down by 26%, 21% tuberculosis down, heart disease up by 19%, malaria 7% up, cirrhosis up by 34%. In other words, it's alcohol consumption, people, and hypertension, the leading fastest growing, 60%. So it's something we have to be worried about here. Why are there such an increasing number of people who are dealing with hypertension and stroke? And these are very expensive illnesses to deal with. So Vernon, when you're looking at your 60s and 70s in terms of your life, what you're going to retire into, the decisions you have to make as a 20-something-year-old man are going to affect your abilities to live well in those times. Your health decisions today, okay, are going to affect. So think about the hypertension cases growing by 60%. In other words, the probability of you dying by hypertension as a person is growing faster and faster and faster. So the fastest growing illnesses are hypertension, cirrhosis, and let me just go back to it. It's hypertension, cirrhosis, which is 34% growth, and stroke. Okay, so it's just hypertension, stroke, and cirrhosis. These are your 3 fastest growing methods of passing away, and also heart disease is actually starting to pick up as well. So what do we need to look at? These are lifestyle illnesses. Most people who are now dying or grappling with these are dealing with lifelong illnesses or lifestyle things. So in other words, it's not you get sick, you go to the hospital and you could die. It's you've been sick for a long time, buying medicine for a long time. So your healthcare decisions and your healthcare availability. So this is a mistake a lot of people make in their retirement. You've made enough money to eat, to sleep, to go all those things, but you haven't factored in healthcare, okay? Because it's going to be your number 1 issue. Your number 1 battle is going to be your health, okay? So are you doing post-retirement healthcare savings? There's an actual product you can start to use as people, okay? This is something I advise to people. Do you have a post-retirement healthcare savings plan? And have you started to implement it, okay? Because what is the insurance you want to have available? And 2, what health decisions are you making now? So let me give you a trend. I wrote something as one of my New Year's resolutions to try and become more nutritious, to try and manage more nutrition myself. So therefore, I'm counting my calories. I've got a calorie counting application. But a part of my strategies is to look at my sugar consumption. One of the toughest things I have is sugar. That's why I said yesterday, I said you can forget about alcohol, weed, and liquor. The toughest thing to quit in this world is sugar. Sugar is the toughest thing to quit, my friend. If Pablo Escobar dealt in sugar, I'm telling you, we'd all be junkies right now. That's how tough that stuff is to quit. Sugar is strong. So let's take a look at sugar trends. I did some data digging here. And here's something interesting, Vernon. Based on sugar production data and sugar sales, domestic sugar sales, the average Zambian has gone from consuming 11.5 kgs of sugar per year. I'm including babies and children in this, by the way. The average Zambian has gone from consuming 11.5 kgs of sugar per year to 19 kgs of sugar per year just in the last decade. Okay? The average person is doubling their sugar consumption a year. Okay, that means we're eating more fast food. That means we're eating more sugar-based products. We're eating more fast food sweets, everything. That consumption level of sugar is leading to a potential for the growth of things that in later age will grow into strokes, will grow into hypertension, will potentially grow into diabetes. And these are costly illnesses to live with because these aren't diseases you die of. These are sicknesses you live with. Okay. And you pay medical costs regularly. And this data I've just been looking at it, trying to figure out. Now, we're not where America is. Now, America is the number one sugar consumption nation in the world. The average American consumes 45 kgs of sugar per year. Yes, Renan, I'm not lying. The average American consumes 45 kgs of sugar per year. But then you have to understand, America is also the highest diabetes country in the world. Okay, diabetes prevalence, and I think if you look at it, diabetes prevalence, and you know where the pandemic was hitting the worst was actually the diabetes countries. That's where you were actually seeing the diabetes prevalence countries where it was hitting the worst. And I think if you look at it, diabetes prevalence in the world, you are finding Brazil is the number one diabetes prevalence. The top diabetes prevalence countries in the world are Brazil, United Kingdom, China. If you look at the pandemic, that's where they were being ripped to shreds in those areas. So obviously diabetes plays a role, but covering diabetes, you often find hypertension. All these things are often closely by. So there are two things everyone needs to understand if you want to have a happy retirement. Okay? Don't take healthcare for a joke. These are certain things I've actually started to make decisions. I'm 35 now, okay? And I'm going into 36, and I've realized that the decisions I make now when I'm 35 are going to affect my life when I'm 55, okay? And I know people I know there's this whole thing these days of body positivity, and you know we gotta accept all shapes, form, and sizes. But let me be honest with you, man. Things like diabetes and hypertension, those things discriminate. Okay, those are discriminatory illnesses, and I don't care about your feelings. Those things will come for you. So I'm not saying it's only if you're a certain shape or so, but it is good to start looking at it. You may think that a health check for a health, you may think that budgeting for an annual checkup is a problem, maybe too expensive. But let me tell you what's more expensive, Vernon, than budgeting for an annual checkup: heart medication. Okay, that's more expensive. So you're better off catching this thing. In studies done, and I'm going to point this out at the men, because you know the problem with us guys, we go to hospital when we're dying. That's that's the reality. Women, and I think mainly due to reproductive issues and so forth, women tend to see doctors more frequently. Okay, and they tend to go to hospitals more. You do see women visit doctors much more than men. Okay, and they tend to take their health a lot more carefully. This is the reality. However, the reality also is that men need to stop this thing of only going to the hospital when you're basically coughing blood. Okay, you have to get to the point where you can go to the hospital and check things up, because a lot of these illnesses are things we want to start checking up on. We need a lot of these illnesses are things we want to start checking up on before, because if we catch these things early, you don't have to treat them so harshly, and you don't have to get your diabetes, don't have to get to type 2. You know, these things don't have to get to high level, fourth alert, heart problems. These are the things we're trying to avoid. And I know we're seeing some of the comments when it comes to here. I think we've seen one here by Lamek, who's saying it reminds me of people complaining that if they stop taking beer, then breweries will close, leading to job losses. But I'm sure job losses versus life losses might be a case that we want to deal with. And the other thing also is that I've seen a lot of people who retire, but unfortunately, due to their healthcare costs, they've also become a financial drag on their children's capabilities. So if you don't take care, the other thing you have to remember is if you want to end black tax as a generation, if you want to end black tax as a generation, you have to then make sure that the next generation is not burdened with your food costs, is not burdened with your healthcare costs, is not burdened with your lifestyle costs, okay, or your home costs. If you can manage your food and transportation and your basic clothing, those things, your lifestyle, if you can manage your healthcare, and if you can manage your home ownership, you will not black tax your kids. Highly not black tax your kids. Okay. So now it's healthcare is the main one. I see a lot of people, because a lot of people you hear, Vernon, somebody will tell you, no, I've got financial strain. I take my mother to the hospital. I take my dad to the hospital, my aunt and uncle. There's always somebody in the hospital they have to take care of, because we didn't think about these things when we were younger. We YOLO our lives now and we don't take care of it. So I say this again, people, take care of these costs, because I'm telling you, at the rate, when you start seeing 58% growth in stroke deaths, and remember that even our Minister of Health was saying she was alarmed at the number of people who are dying of cancer in Zambia. So we're seeing heart disease deaths, stroke deaths, cancer deaths, hypertension. These things they're growing in society, while things like AIDS are declining in society. Neonatal disorder is declining in society. TB case deaths are declining in society. So let's put our focus. I know those things are still at the front. Doesn't mean we don't have to take care of them. But maybe let's put our focus on what we're putting in terms of consumption. Because I am telling you that the fact that we're doubling our average person sugar intake from 11.5 to 18, so 11.3 to 18.5. Okay, 11.3 to 18.5 kilograms of sugar consumed by an individual per day. Per year, should tell you something. Okay, that's a doubling. There is something in our lifestyles that's drifting us towards sugar consumption at higher levels that we need to be very careful of, and it will have health implications and it will have financial implications. Big financial implications, because the cost of managing hypertension, the cost of managing diabetes, the cost of managing heart disease, being on pills every day and having to go in to check in with a doctor now where you were only going once every 5 years when you were sick. Now you have to go in every month just to go and check, paying consultation fees, all those things. Your life will be expensive in your 60s. So look out for your 30s. I'm doing it now because, but as I said, people, sugar is a tough drug to quit. It's a tough drug. It's everywhere. It's a tough drug. I think on that one, I rest my case, because I just wanted to really talk about it, because I think it's an issue that we're not looking at. And as a financial advisor, I think it's really important that people take care of those decisions before they become financial problems.
I think, before we literally do close, I shared yesterday's episode of Behind the Markets on my Facebook page. And one of the comments I got in my inbox was someone asking, saying, what is stocks? I heard you guys talking about stocks and stocks and stocks. What is stocks?
Yes. Stocks are shares of ownership in publicly listed companies. In other words, instead of you starting your own company to build wealth, because most people build wealth by starting their own companies, you can buy into an already started company that's growing and share in the wealth and their growth. Like I mentioned, Puma Energy, for example, whether it's Zanaco, whether it's Zambia Sugar themselves, who have got me hooked on their sugar. But but I'm just saying that whatever products you see around, like some of these are companies, you may not have entrepreneurial acumen. So maybe your best option, in fact, 95% of people have got no entrepreneurial acumen. But what you can do is invest in companies, and therefore you want to find credible investments. So stocks is buying a portion of ownership, using your savings to buy a portion of ownership in a publicly traded company listed on a stock exchange like the Lusaka Stock Exchange, where you can take ownership. And if they pay out to their shareholders, you get a share of that. And if the price of that share grows, or the value of that share grows according to the market, the value of your stocks grows. So that's what it means. It's a way to save and invest your money.
I'm pretty sure they'll be who are listening or part of it. If not, I'll probably do share again on my page.
No, that's a good question. It's a good question.
Absolutely. I feel it's those people are interested. They need the information, but they sometimes miss it here and there.
Yeah.
But anyway, thank you so much. Quite a detailed conversation, and just
there's just one question. Sorry, and the one person that said, yeah, our parents, I think it was Mosi Joseph, and I'll try and end this quickly. He said our parents say they did a lot for us. Now it's our time to take care of them. And I understand that statement. The problem is the cost of taking care of these parents is because when you look at their parents who they took care of, their parents were stuck in the villages with no health care. They didn't have no health care costs, nothing. Okay, their parents were in the villages. Now these ones want to live in the suburbs. So suburban taking care of parents is different to village taking care of parents. It's more expensive, people. It's more expensive, and healthcare costs. And their parents didn't have all these illnesses. They have these. That's the reality. So these are the trouble. These are the differences in the we took care of you system. Okay, so that's what I'm trying to say. But it is something to consider. Anyway.
Absolutely. Still listening to Behind the Markets. Of course, we come to the end. Last comment, of course, we got on social media is Sunga. That particular saying of keep me, I look up to you, as you just said later on, as I lose energy. Thank you so much for still staying glued and just staying part of the conversation. We call it a day from here. Do tune in, of course, for the next episodes tomorrow, sometime pretty much right here. My name is Vernon Chatifi. Do stay locked on to 93.7 FM.